Hi guys, I'm Harry Yotis. I've been a professional trader for 20 years now. Started off my career back in 2005 working for National Bank, and for the past 10 years I've been trading my own account. So let's get to it. For today's daily market update, this candle here on the S&P 500 is Friday, December 19th, and the big news of the day is OPEX day. Options expiring today, and it was a large one. Okay, but before we get to the main event, let's talk about always the market and the technical analysis coupled with sentiment. Okay, so the technical picture of this market was bullish, then went to neutral after this big down day. But because we're in OPEX and we have a lot of chop, we're back down to bullish. As you can see, the 50-day moving average for 2 days now. We closed below it, making it neutral, but now we're back above to bullish sentiment because it's trading above the 50, and we still have this rising pattern that has not been violated. Okay, let's get rid of this for now so we can see better. So the technical picture is back to bullish. This double top might not play out. See, this is why it's so crazy to look at just technicals, because here we have a double top. Okay, but we also have, forgive the drawing, but a cup and handle. That could be bullish. If it breaks the new highs, forget it. New highs. So what are we? Double top, cup and handle, who knows? Okay. But the point is, we are bullish. Okay, let's kill this right now. We are bullish because we closed above the 50 and because nothing has really been violated. Okay, and we always pair our technical analysis with sentiment. Here is the fear and greed index, neutral. We have plenty of way to go before we get to extreme greed. Everything's in fear, fear, fear. And we were supposing that the put and call options, because they're delayed, it's a 5-day moving average of the put call ratio. We went to extreme fear. And that's because of, OPEX. And here on Wednesday, when this big crash day happened, down 1%, people were buying a lot of puts, as we were saying in our previous daily market update. Okay, so the sentiment is still neutral, just barely into it, so we have plenty of fuel to go higher. So together, I'm concluding that this technical picture is bullish. Okay, so let's get to the big news of the day, OPEX day. Okay, this was a big OPEX, especially since it's one of the 4 of the year that is like, quarter expiry. So it's very, very voluminous, if you will. It has a lot of volume. However, this was CNBC's title yesterday. Friday could be a wild day of trading on Wall Street. Here's why. Because more than 7.1 trillion in notional options exposure is going to expire on Friday. And this was the biggest December options expiry of ever, of the year, of every year. Okay, so there was a lot of options that needed to expire, and we were positing this whole week about options expiry. The market makers made a killing. Okay, they had to. Here, we mentioned it before. Let's make it clear so everybody sees. Here, a lot of calls were bought. And right here, a lot of puts were bought. 7.1 trillion set to expire today. These guys bought at the highs. Big mistake. This is why you don't just look at the technicals. You have to look at everything else, because here, technically, this day was a breakout to new highs, so you should be buying. Nope. Here, technically, it broke below the 50. It broke below the 50 moving average with a double top. So technically, if you just look at technicals, this is bearish. So everybody bought puts. So this is why it resulted in one of the biggest options expiry day. And these guys expired worthless. Perfect. Okay. So we were talking before here that this put call ratio was an extreme fear. This will probably go down to like neutral or fear very soon, because a lot of options are going off the table. Okay, so let's kill these guys here. We don't need it. Oops. just to get the point across that there was a lot of puts bought at these specific levels because people base their trades on emotions. I wouldn't say emotions. It was emotional, yes, but it was just purely on technicals. You have a lot of large funds that follow technicals like CTAs and all that. So you have a lot of momentum-driven funds that will play this game, and here they got killed. And this little circle here is because we were positing around here that the best way to kill the buyers of puts here, the buyers of puts and the buyers of calls here, was if the market closed around 680 to 682. Okay, and guess what? We closed at 680.59. So this just shows that right smack in the middle of these two options levels is what destroyed all of the premium, and the market makers made a killing because they sell premium. Okay, so we don't need this anymore. Just to show you that this was the target, kills everybody. Now we're back to neutral. We don't know. I'm bullish because the technicals support that. Okay, so let's in the second half recap what's going on with all of the stocks that we have been looking at, and see where everything is in terms of the end of options expiry on Friday the 19th. Okay, so let's look at the AI trade. Everybody was crazy that we're saying that the AI bubble is over. So let's look at NVIDIA. What happened? Well, we said that NVIDIA rebounded today because it's chop, chop, chop on options expiry. So it basically finished up on the week. This was a Monday right here. And it's still caught within this sideways consolidation, which is good because if you look, all of the RSI, here's the RSI, all of them are in neutral. So perfectly set up to go even higher on the next push. Okay. What about that's NVIDIA? Okay. What about the other darlings, the other AI darlings that we have here? Oracle. Remember, Oracle was supposed to get destroyed, and it was down almost 50% in 3-4 months. Well, boom. Here's Friday. It went higher, and the reason we have this line here is because remember we talked about the fact that it was getting overdone, the selling. Okay, you had price action going down and the RSI going up, which is a positive divergence. So we might get some relief rally going up. Okay, we might even cover this gap here. Okay, so some kind of relief rally is coming, I think, in Oracle, even though it's a perennial loser. This AI type trade might, stock might rebound. Okay, which I think it will, because I think the market goes up going forward in the weeks to come. Okay, the other one was what? Google. This is the most bullish of them all. Hasn't broken anything. Let's see the moving averages here. Well above the 50. Didn't even touch the 50. So Google is probably the strongest one of all of these AI picks. Okay. So is the AI bubble over? Nope, not according to this. We might get a couple more months of run in the AI space. Okay, what about the stocks that we follow? We had a number of trades. If you recall, when we were bullish around here, okay, we were very bullish here as the Bitcoin capitulation was ending because there was no more people liquidating assets to raise money for the Bitcoin margin calls. So we suspected under extreme negative sentiment here, extreme fear, we were long, okay? But once the market rebounded dramatically and got to these levels, okay, we basically rode our longs here, sold a couple, but we decided at this point right here that the best trades going forward in December, because trading is going to get very, very thin, and maybe into January, would be to hit singles, to hit some trades that we might get out of in 3, 4, 5 days, maybe 2 weeks, okay, max, okay. And yes, we were right, but we didn't know which way the market was going. At this point, we have to be more cautious and hit singles. So we were doing that. One of the singles that we played was Microsoft, okay? Especially when Microsoft was going down here. You can see this. I draw these horizontal blue lines to show important levels, and look at this level going back to 2024. As you can see, boom, it got hit right here. We entered immediately on the hit. Because we weren't certain of what was going to happen, we decided to sell premium. We sold a put spread here, okay? And as it rebounded for 3-4 days, boom, we got out of it on the pop, okay? We made at least 75 to 85% of the maximum profit that we could. As it fell down, we entered it again, okay? And we're still holding. I think it was here that we entered, around here that we entered again, but we're still holding, okay? This is showing a profit, but not that much. Yeah, I want to see it go higher so we can realize a bigger profit. So the first single that we hit for Microsoft was doing fairly well. The next trade that we are in is Tesla. Okay, we entered this around here. Remember, we said we entered a number of trades in SPY when it was trading around the beginning of December, which is around this area. But Tesla in the beginning of December was trading around these areas, this area right here. So this trade is doing very well. Okay, we are making money on this one as well. So all of our trades, we closed one. Microsoft is doing well. We have an open Microsoft. We also did CrowdStrike. Okay, as it was falling here, we bought in the beginning. Okay, on the pop-up, we got rid of it. And right here, I decided to re-enter a CrowdStrike on this candle here. We were back in on CrowdStrike with a 420, 400 put spread that we sold. Okay, so we are entering singles. We're hitting them. We're getting on base. We're closing them, and we're reloading if we think it's a good idea. Okay. Meanwhile, we're still holding the longs that we've always had in general equities and precious metals. Okay. Speaking of precious metals, what's going on here? Silver, the darling, closes the week at new highs. This is a massive run. We were super bullish here after the big run up. We were waiting for a chance to enter. We entered it here when everybody was scared. If you see the moving averages, it never really touched the 50, but we entered it as it consolidated here. Okay, and then the breakout here is obvious. You have to go into it. We're still holding our silvers. Got out of a little bit. We sold Hecla, a little bit of the Hecla piece here when it went to 20. It spiked up to 20 before here. Okay, like a week ago, we got rid of a little bit, but still holding the vast majority of our position. So silver looking good, closing at highs. However, the one that I like the most is gold. Stealthily, look, sideways consolidation, sideways consolidation right here. Very, very quiet. Nobody's talking about it. Retail is not in this. Retail is in silver, for sure. Okay, you can see that for the miners are also exploding. But for me, the move going forward now is gold because it's really, really snug here. It's coiling up for a big move above the 440. Once this breaks, you're going to see a huge move. I suspect that once it breaks, it's going to look very close to this play right here. Let's mark it. It's going to look very close to, oops, that's not what I wanted. Well, we can move it here. It's going to look very close to here. Let's get rid of the moving averages. It's going to look very close to this candle right here. Okay, this candle right here. I don't know if you can see it. This candle right here. Big break above a consolidation. And then a big run. I don't know if it's going to be as big as this silver, but I'm pretty sure that once gold breaks, you're going to see that big candle and then off to the races. That's what I suspect. And I think it's happening going forward in the weeks to come into January. I suspect it happens into January. Okay. So that's it. Let's recap, guys. For the 19th of December OPEX, I am bullish. We are above the 50-day. So technically speaking, I'm bullish. Fundamentally, I'm still bullish. Nothing has changed. As you can see from the macro that we keep updating you, no fundamental change. So the fundamentals are a green light. It's just the technicals now we're talking about. Okay. So the technicals here, bullish, sentiment, barely neutral. So I am bullish because I expect us to get into the greed, extreme greed level. So we might have a month or two or more months to go of this up move, especially since I think it breaks to new highs. The AI trade, NVIDIA, we'll use this as an example. Rebounding during OPEX, we got the chop that we wanted. Still recycling the RSI for a move higher. We have, what else? Oracle playing out that positive divergence in the charts. I think it goes high, maybe not super high, but right here. Maybe a move here. It's still pretty good. I haven't played it. I'm not in these stocks. I'm not in Nvidia. I'm not in Oracle, and I'm not in Google. I was hoping Google would fall lower because I would have been in Google. But the stocks that I am in for singles are Microsoft here. Okay, we entered again as it retested. Of course, covered one here, so we're good. Tesla, that looks very good. I'm still riding it. New highs here, holding. Well, not all-time highs, I guess. Yeah, all-time highs. Beautiful. And CrowdStrike re-entering it 2 days ago on this move. Everybody thinks it's going to be a double top. I disagree. So I'm going against the technicals. Like, look here. If I could draw it, you guys can't see it. This is a double top on CrowdStrike. No, I think the general market goes up and all these other stocks go up as well. So that's why I bought it right here, right at this neckline here. I did the exact opposite of what a technician should do. You should draw a line here. You would sell on the breakdown. Didn't. Okay, so I'm buying. I'm going against everything a technician says I should do on re-entering a CrowdStrike put spread. Okay. And silver. New highs, closed new highs, amazing, riding everything. And I think the stealth gold move is waiting to happen. So thanks for listening, guys. I appreciate the viewership. If you like this and want more, just like and subscribe. And, of course, leave a comment below, and I will answer it as fast as I can. So that's it for this week. OPEX day, gone. A lot of premium lost. A lot of money made by the market makers. And I'll see you next week for a very shortened Christmas week. Later.